All right, so today was a pretty good day. One loss, one win. I made a few mistakes that I'm gonna go over. So I made a few mistakes I need to go over, and I did a few good things. So we'll go over the day, like always. So going into the morning, the higher time frame, I'm bullish because on the bigger time frame, we have the market maker sell and buy model. We're gonna be at all-time highs. It sucks. It really sucks because I just don't enjoy trading all-time highs constantly. But we're in the buy side of the curve, so the bullish bias is just going to have to keep playing out. It's boring, but the bias will be bullish for the next few days on the higher time frame. Doesn't mean that there's not gonna be some shorts and stuff like that, but it does mean that on the higher time frame, more than likely, you're not gonna have any other bias but bullish. So you're looking for liquidity sweeps to go long. That's all you're doing until all-time highs. What I do have to say though is that I'm very glad TradingView is back. I can actually go on the 4-hour and do a charting review. And now we can go over the day. So going into the day, I was looking at this candle here. We had this 4-hour fair value gap that was looking to hold since I'm bullish. This data low down here maybe be a point of interest, maybe come down here, sweep liquidity. But since I'm bullish, wasn't expecting that. We dropped down to the 1-hour. We had these lows here, this accumulation. I was thinking that this could be a target to come take out these equal lows to then go long inside this 4-hour, inside this big 1-hour. I was looking at that. Then we opened this 1-hour fair value gap to the upside right here. 11, 12. That we never end up coming back into. That's the point of interest now, but we'll leave that for now. I don't know why the replay mode is messed up. Replay mode. Let's go back to 9:30. Okay, so going into the day, we had this big 15-minute fair value gap. And then we had this 5-minute fair value gap down here. And we were also holding this fair value gap. 5-minute bullish. So going into the day, my bias is bullish. We have data highs right here. So we had a data high, which just means that from a news candle, 8:30, we had CPI, I believe. I believe it was CPI. We had CPI and it left behind a data high. If you don't know, look at Dodgy's videos. Data highs are a massive draw on liquidity. It's like a magnet for price. So I was wanting a setup towards data highs. So going into the morning, that's kind of the bias. That's where we're at in the charts. I'm looking at these internal levels as different points of interest. Here or here was really the targets for the day, to the upside and downside. So we start the morning and we get I don't know why it's slowing down. We get a little move up, followed by a move down. We create an SMT at this low here. We have an SMT. We hold this 5 minutes still because this candle's the close of it. We hold the 5 minute, and now I'm thinking, okay, data highs. I want the data highs. I want to target a long. I jump in off the inverse fair value gap. Here, I get in a long. I'm targeting this high. My stop loss was right here. So this trade is not terrible. We're holding a fair value gap. We have an SMT at the low. We swept out these lows here. We have a data high above. The reason this trade ended up being a loss, in a way I could have got out, is I was more focused on this fair value gap than the ES at the time. At the time, the ES on this very next candle that we close above here, which for me was even more bullish. I was going to go to break even at this high. We made an SMT on ES and NQ. Right here we had an SMT, and here we had an SMT. So at this moment, I was more focused on the move up in NQ than I was on the SMT. The SMT ended up holding and selling off. I took a small loss of around 100 and something. I'm not sure exactly how much. It was like 150 maybe. I'm not sure. So we end up selling off. We hit our stop loss. And this was the first trade. Looking at this setup, reasons I could avoid it. We had two fair value gaps, one here and one here. We were really close to taking out the high on ES. And we didn't really take out the low down here. So one good thing I did was I didn't instantly jump into a short. Although I wanted to short this 5-minute break, I didn't. I waited for price. I didn't jump into a short and target this low out of revenge. I let the market go. I let it do what it wanted. And I let the market sell without me and took out this low. So it sells off to that low. Takes liquidity out of the market. Inside this fair value gap, which is a 15-minute fair value gap, just to keep in mind. Big imbalance from news. What is it also? Let's see. Is it equilibrium of the range? We come back down to equilibrium. We come back down to OTE, the optimal trade entry. And at this point, I'm now looking for longs still. So we come back up. We stall. What do? We make a 5-minute fair value gap right here. We make a 5-minute inverse fair value gap. We need to close above. And this 1 minute right here, boom, on this candle here, we inverse this entire 1 minute to the downside. I jump in a long instantly, targeting data highs. My stop loss was below this low, and the trade ends up coming down against me a little bit, stalling. And on this candle here, we actually get a 5-minute break above, which was more confluence. Now we inverse this entire 5-minute fair value gap. My stop now moved to here. So now I'm risking less. This trade's working good. This bullish fair value gap's holding. 1 minute bullish. What do? We press up. This was my break-even point right here. My break-even point. Because of the loss, I end up scaling at this high. I go to break-even, and price stalls. And what has to happen here? What do we have? We have a 1 minute fair value gap here that hasn't been tapped. And we have a 5-minute right here. So we have another 5-minute fair value gap that just opened. And obviously gets tapped. So when we're sitting here in price, we have a 5-minute on this gray box here. It's hard to see. We have a 5-minute and a 1 minute fair value gap. What does price do? It makes another equal high. We have relative equal highs here. We tap the 1 minute and the 5 minute. So we had a 5-minute here. I'm going to get rid of the 5-minute. We've tapped the 5-minute and 1 minute. We hold this 1 minute fair value gap to the upside here, which is the 5-minute. With equal highs above us, we have the inverse. This setup's looking good. We respected the first fair value gap. And then what happens? We run to the break-even point. My first take profit. And then I let my runner go to this high, and I got out of that high on my runner. I didn't hold it all the way. And we have a smooth trade to the data highs. This was another trade that I saw. We make a 5-minute fair value gap again. We make another 5-minute fair value gap. We make a 1 minute bearish fair value gap that we inverse, and that's the next entry. What's up? I'll make my video. So we get the entry here on the 1 minute. We inverse to the upside. I was waiting for this to break to the data highs. I knew that this trade would work out really well because we had the 5-minute, we had the data highs. I took this on paper, but I knew this was another trade entry. So I actually ended up getting out at this high on this trade. So there. Then I knew that this was still the target. So I was waiting for price. If we could break above this, I would have a nice trade. We get a close above right there. I jumped it on paper, stop below the low, targeting the data high, and you could have left runners. This was a pretty efficient trade. Holds the inverse fair value gap twice. This is your break-even point. Break even, and then your take profit gets hit within the next two candles. So right there. So this trade was the last trade that I saw. So going back to the day, this was the setups, and this if you understand the inverse fair value gap model, you understand ICT concepts, this is so beautiful. This is a 31-point winner and a 12-point winner, so that's about 43 points, and we lost 20 points. So we made 20 net on the day if you took both these. But just look at this. This trade didn't work out. It wasn't that good. We had reasons against it. Double SMT, sold off. We had an SMT here. Sell off, take out the low. Inverse move with displacement. It jump in, holds this fair value gap, displaces higher, holds the next fair value gap, 5 minute, displaces higher, holds a 5 minute fair value gap, displaces through an inverse, break even point, scale. You could have left runners to this high, and it just worked perfectly. So this model right here, honestly, if you are watching this and you're actually learning something, or like you're trying to start out, I don't know if anyone ever sees these videos that doesn't know how to trade. Just study this right here. Study the data highs here, this target right here, and study how we got there. And then you'll see that there was a market maker model here. You'll see that there was a market maker model here. And this is more of a concept I would watch Justin Werlin about, because we had a model inside of a model inside of a model. What do we have here? What do we have here whenever we, let me take these off. Right here on this 1 minute, what do we have? If this was a 1 hour chart, we have stop losses right here. We have stop loss. We have an SMT. We have a bigger time frame for value gap, which is right here. We have a bigger time frame for value gap. We have a inverse fair value gap. We have a draw on liquidity. And we have a higher time frame target. So this trade, even on such a macro level, is really, really good if you break it down, because price is fractal, which just means price happens the same on all time frames. If you told me this is a 15-minute chart, 5-minute chart, 1-minute chart, 30-second chart, whatever, this trade still looks great, because you still have the market maker sell and market maker buy model on the very small time frame. It happens everywhere. Every single place it happens. Here happens. Here happens. Here happens. Here happened here. You know, it just happens constantly, and you have it to the downside as well. You have we don't have one here, but just look how price is fractal. A market maker buy model in this little area, in this area, in this bigger one. It's just models inside of models inside of models, and just this is just such a clean day. If I remove where we're at in the charts now, again, after the objective, the data high and this high here at 68 gets taken, we're close to this level, but After the objective's taken, step away. That's something, if you learn anything from this video, after the data high or after the target objective is taken, step away. There's no opportunity. This inverse is a break-even trade. Like, nothing's working. There's no confluences here. There's a 15-minute here. Like, there's no confluence. Look at this 15-minute chart. 1, 2, 3, 4, about to be 5 doji candles. This is disgusting. Look at the 5-minute. This is disgusting. Why is that? Because we had efficient price. We had a 138-point run-up, efficient price action with fair value gaps, and price moved how we expected it to. Early in the morning, we take out the objective, and what do? We go sideways. Don't trade after the objective's taken. What were the mistakes I made? When I got into this trade here, instead of holding to the target, which I knew was going to hit, I got out because of the earlier loss. I was thinking more about the P&L rather than the actual execution of the trade. I can't do that again. I can't make that mistake. Simple rookie mistake I always do. I trade with emotion because of I care more about my P&L and being green on the day than executing my trade. If I execute this trade properly, it ran pretty much straight 50 points to my TP. Would have been a way better day than I even had. So because I tried to capitalize and make it a green day, I missed out on a really big green day. And that's something I got to get better on. That's the main mistake I made today. Things I did well is after the first loss, in my head, I was frustrated and wanted to just jump in and make it back. I knew that just trying to make it back would cause more loss, and more loss would just make, I would have to win more. So I knew it wasn't going to help me. I didn't jump in anything stupid, and I waited for another setup, and I didn't get scared when I was in the setup and it started going against me. Because at one point I was down $100. So it was looking scary. But we got in and we executed good. So that's something we did well, was we executed when we saw a trade. We learned from our mistakes, and we didn't get nervous, and we didn't get scared, and we didn't just jump into a gamble trade to make money back. We waited for our setup, and we got rewarded. I got rewarded from sticking to my rules, so I have to remember that. But overall, yeah, very, very clean day. There's not really much to talk about. This price, it might not look like much, but when you break it down and trade it the way I trade it, this is just so clean, dude. Like, these are the days as a trader that you live for because it's so easy. Days like last Friday when it's hard and you get wrecked, those aren't fun, but when it's easy, you got to capitalize. The last thing I want to talk about is just the bigger time frame. Again, it looks like, sadly, we're just going to run to all-time highs. We only got a few more targets left. It's pretty much this high. Here. And then we got this high here. We got these two. I'll mark those out. So we got those highs. We're about to run all three of those. And then we are a skip and a hop away from all-time highs. I mean, this is just not cool. 1,000-point rip since May started, bro. We kick off May and we rip 1,000 points in 2 weeks. Like, bro, it's just 2 weeks, 1,000 points. That's like, I don't even know. It's a lot of points a day. 1,000. It's like 50 points on average a day, I think. So whatever it is. We're at all-time highs again. We had a good run. We had a run of March, April. We had a good month and a half of not all-time highs. And now we're just going to be bullish, and it is what it is. We're 26 points away from taking out all three of these highs, and then we're less than 100 points from all-time high. What can you do? That's the market. It's just, I hate being at all-time highs a lot, but it is cool to see. We swept out this low, this low, this low. We rebalanced price into this imbalance. We're ripping up. Great day of trading. There's nothing more for me to really say. Happy with how I traded. I made some mistakes. I learned from them. We're getting better. Excited for tomorrow. I'll see you guys. Peace.